All right, good morning, everyone. The 7th of April, Thursday morning, we are looking at the dollar index. We are looking at the yen pairs, particularly the US yen, the euro yen, the pound yen, and then lucky last, we're looking at gold, right? So this is the daily currency call where I'll be looking through individual, particular currency pairs for a day, giving you possible trade ideas, possible trade, what to look out for, what news to pay attention to, and what's actually happened overnight, just so that you might be able to use the information and trade with that. If you're a club member, this is recorded live for you. If you're watching us on YouTube, then we're actually uploading this later into the session. If you are not a club member, make sure you check out the links, check out the comments below, and join us as a club member so that you can watch this live, not as a delayed telecast or broadcast. So you get the trade ideas immediately rather than, you might have missed out on some trade ideas after it's moved already. So with that, before I go further, club members, remember tonight, 8 p.m. GMT plus 8, we do have another trading session, another night session. So, I'll be going through the H1 charts, M15 charts, looking at possible trade ideas, shorter term trade ideas for you guys that you can jump into almost immediately. So as usual, a quick disclaimer again, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of myself. So please remember to do your own analysis prior to entering any trades. All right, so overnight what we saw was that, or not overnight, early this morning, what we saw was that at 2 a.m. this morning, we had the US FOMC meeting minutes release. And with that, we actually saw a bit unexpectedly, right? I didn't expect that much of a price movement with the meeting minutes, as I was sharing with you all over the past couple of days. But what actually happened with this meeting minutes was that we actually saw quite a bit more volatility than usual. We saw that dollar strengthened, the dollar index strengthened, the dollar strengthened pretty much across the board for about an hour before it retraced and set in that consolidation again. So what happened during this meeting minutes, what was released during the meeting minutes? Here, I've actually gone through, this is the full meeting minutes on the FOMC release, and I've actually highlighted the key points. So you can actually read through this throughout the day now, just to get a bit more familiar with how they report the meeting minutes and how they report the meeting happenings. But the key things to pay attention to here, which I've highlighted in red, is from the FOMC that all participants or all FOMC members agreed that the elevated inflation and tight labor market conditions, we've actually seen, well, it's no secret that inflation in the US is at multi-historic high levels, and also employment numbers have been very strong in the US. So all of that put together has actually warranted commencement of balance sheet runoff at a coming meeting with a faster pace, right? So they're looking at possibly increasing the resumption of the balance sheet, or the commencement of the balance sheet runoff at a monthly cap of 60 billion for treasury securities and 35 billion for agency MBS. So that's a total of 95 billion a month that they're looking to take out from that balance sheet, right? So 95 billion, that's one key factor that actually shows that that actually indicates a bit more of a hawkishness, a bit more of a positivity coming from the FOMC there. And then also, so these are all the reasons why we saw that dollar strengthen. So all that Ukraine and Russia invasion of Ukraine was a big negative shock to the global economy. So that was one of the main factors that they were considering as well at that meeting. And then a lot further down into the minutes, right? So this is actually quite important here. This is, one of the main things here was that the committee's objective inflationary risk to the upside and Fed funds rate well below their estimates of the longer run level. They would have preferred a 50 basis point increase in the target range. So what they actually did was a 25 basis point increase. They would have preferred a 50 basis point, but because of the Russia invasion of Ukraine, they only did 25. So that's actually giving you a bit of a feel of what the FOMC members were anticipating or their views. They were actually very close to that 50 basis points increase. Many participants noted that one or more 50 basis points increase in the target range will be appropriate at future meetings, right? Particularly if inflation pressures remain elevated or intensified. So, you know, it could come to the point where we're going to see 50 basis points increase as not going to happen just once. We're looking at that. Well, the rumor is that that might happen in May in 50 basis points, and it might actually happen more than once. So we're going to see if that does play out. We're going to see that dollar strength possibly being a bit more consistent, a bit more sustainable for that dollar strength being applied. So bear that in mind with the FOMC release meeting minutes, or no, meetings to be released in May and further on. We might see we might see that 50 basis point increase. We might see that dollar strength being applied. Right, all that is also because they're paying a lot more attention to the risk of further upward pressure on inflation and longer run inflation expectations. So that 25 basis point increase that we saw last month was, you know, forced because of the Russia-Ukraine conflict. We're likely to see further increases now, especially now from now onwards. If you see economic data being strong, we see further inflation numbers or CPI numbers being higher than expected or still increasing. That's likely to force the FOMC into further or possibly even a bit more aggressive action in terms of their policy, in terms of the rates policy, right? So those were the key factors to pay attention to in terms of the FOMC meeting minutes, indicating that they were actually very close to that 50 basis point increase, and further meetings, we're going to see more of that happen as well. So what that all meant, putting that all together, what it all means is that on the dollar index, when we spoke about it yesterday, it was close. I think it was close to that. Where was it? When we spoke about it yesterday, it was close to that 99.50 level. I'm still anticipating for it to move towards that 100 level. It's shot up towards 99, about 99.73 before retracing back down. I think what we're likely to see here for the dollar index on the H4 time frame is a bit more of a consolidation at this level before a further move towards the upside. So I'll drag this down a little bit, right? Why that consolidation at this 99.50 level? Again, just to highlight, this is a very key level. We saw it in March, rejected once. We saw it come close mid-March and then end of March again. So for it to break above, it's not going to be that straight line upwards. It's going to have to test. Looks like it's going to break back down, bounce back up, break back down, bounce back up, like what happened here. But I think that with this playing out, we're likely to see that move higher, especially as they firm up or they continue talking about further rate increases and keep mentioning about that 50 basis point rate increase. We're going to see the dollar push towards the upside. And also, like what I was sharing with you yesterday, if we see other currency pairs weaken, then the dollar might strengthen in relation to the other currency pairs, not just because of what's happening in the dollar. So that actually gives us a lot of trade opportunities to be had across the board. But for today, paying more attention to the yen pairs, let's look at first the US yen, right? So looking at the US yen here, we were speaking about this with the Traders Club members, looking at that further upside. The last time we spoke about this last week, I was looking for it to break above this 123 level to move towards that 124.70 and possibly even that 125 level. It's done that. It's moved. Let me just check. Oops, take that away. It's done that. It's moved about a good 80 something pips towards the upside from the last time we spoke. At this point right now, if you haven't already jumped into the US yen as a trade opportunity, I think what you could be looking for, not to jump into a trade right now, but look for it to break above the very immediate high level of 123.88. Look for it to break above 123.88, and then you can look for it to trade towards 124.70. So as a trade idea, what it looks like is for it to break above say 123.90, right? I will keep my stop loss quite tight at about 35 pips here, and then your take profit level could be towards that resistance level of 70 pips of about 124, well, 124.70, back to that recent high point. So you're still looking at a 1:2 risk reward ratio towards the upside for the US yen. But bear in mind, don't get into a trade right now. We might still see some retracement, some corrections at this level. Look for it to break above that 123.90 before looking to buy the US yen towards the upside. This is because of what's happened with the FOMC meeting minutes, and also with the comments coming from the Bank of Japan that they have been buying 10-year bonds at 0.25%. They have said that they're only going to be worried, or they would be worried, if the US yen goes towards hits 130. So anywhere from here to 130, probably not going to see too much intervention, not going to see too much hassle. We might see it move towards 130 before an aggressive intervention from the Bank of Japan, especially after their comments saying that they'll be worried at that point. So look for it to break that look for it to trade towards that 124.70. I think from that point, then we have another trade idea towards the upside again, capping at 130 level. So that's for the US yen. Moving on from that, looking at the Euro yen. Euro yen, I'm still looking at that possible retracement, right? The last time we spoke about this, I was looking for it to test and reject 134.98, or say 135. It didn't happen. So it didn't happen to test below that. We saw it break up, we saw it break above, and then testing back to that 135 level. I think what we should be looking for here is not any trades on the Euro yen at this point, because we're anticipating that US yen to push up. We're anticipating US yen to push higher. But if you look at the euro dollar, it's actually dropped below that 109.45 level. We've been talking about this several times already. It's dropped, it's bounced back, rejected, and dropped again. Only if the euro dollar drops quite significantly from this point would it drag the euro yen towards the downside. So you would have to wait for the euro dollar to move towards the downside before you could see further downside on the euro yen. If the euro dollar stays in that horizontal fashion, doesn't move too much, and the US yen pushes higher, then we could see this move towards the upside. So again, this comes to the point where the euro yen, you would have both that upside opportunity. So an upside opportunity would say above, to be extra safe, would be above 135.36. Right, your stop loss in that case would be about 60 pips to be below that support level. Your take profit level could be 150. I would say even 120 would be a reasonable take profit level towards that recent high points there. A 1:2 risk reward ratio towards the upside for the euro yen if it breaks above this 135 level. If it rejects this 135 level, then you can be looking for selling opportunities below 134.67. Stop loss can be a lot tighter here at a 40 pips. Take profit at about 80 pips. Again, another 1:2 risk reward ratio towards the downside for the euro yen on H4 time frame. So it all depends on what the euro yen is going to do at this 135 level. If it breaks higher, look to buy, especially if it breaks above the immediate high point there. If it breaks lower, then look to sell below that 134.66 level. All right, so a bit of more flexibility there available on the euro yen. Looking at the pound yen, I would urge everyone to be extra cautious, possibly no trade on the pound yen because it's sitting right in that middle of the 163.88 level and 160.82 level. Sitting right in the middle there, any buying opportunities or selling opportunities might have quite a big stop loss. And pound yen does tend to be quite volatile, spiking towards the upside and then retracing very quickly, as we've seen several times here, a bit here, and here as well. Why to stay away from the pound yen as well is because if you looked at the pound dollar, we just spoke about that yesterday. We looked at the pound dollar, it hasn't found any direction either, right? We spoke about the pound dollar looking to sell down if it broke that 1.3059 level or 1.3060 level, didn't break, spike down, didn't break, bounce back up. Looking to buy if it broke above that 131 level, 1.31 level, didn't, right? It spiked up, looked like it was going to break and then spiked back down again. So the pound dollar itself hasn't found any directions. So we're likely to see, because of that spike towards upside and downside on the pound dollar back to the pound yen, we're likely to see that volatility continue on the pound yen or translate over to the pound yen. So I would stay away on the pound yen. My bias would still be towards the upside if it breaks above that 162.13 or even 162.40 level. But I think that for pound yen, to keep your stop loss quite tight, you'll most likely get stopped out by the volatility. So I think to play it safe, let it retrace towards the support or move towards that resistance before looking for a trading opportunity for this pair. With that, any questions at this point from our Traders Club members on the Zoom call? No questions at this point, then we'll look at the last one, lucky last, gold. Gold has been unusually, or usually, but a bit unusually quiet, right? It's been spiking towards the upside, downside, it hasn't done too much. The last time we spoke about it, I think on Tuesday night with the club members, we were looking for upside potential towards that 1944 level, right? Towards the 1944. It touched that and went straight back down with all that tails and shadows on gold. I would say not a great trading opportunity, but what you might want to look for is for gold to track lower and transfer it into more of a longer term trade. Look to buy every time it drops down, look to buy into value, especially if it goes towards that 1900 level. I think that we're going to see quite good reactions towards this point. So currently at 1923 or 1924, I think that if it drops, don't look to sell, possibly look for buying opportunities on gold at this point. So quite straightforward. I like it, especially with the anticipated dollar strength being applied, making trades possibly quite straightforward, easier to look at now. If you are trading this, make sure you trade well, trade safe, and Traders Club members, we'll see you tonight, 8 p.m. GMT +8. Take care now. Bye-bye.